Good morning, everyone. Microphone check, screen check. Looks like everything's working correctly here. All right. Good. Thank you for the check. Perfect. Welcome. Hopefully everyone had a chance to get rested up and ready for the day ahead and all that fun stuff. Going into a Friday, that's always interesting. As per the usual, make sure to read through the morning prep PDF on the right side. Very important to understand everything that is inside there. All right, sorry about that. My son's messing with hair gel. There may be interruptions to come. Just saying. Just a quick note for you all before we jump on in today. If you're watching on the YouTube side of things, the stream does have between a 5 and 30-second delay, depending on where you're logging in from, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning. Just want to take a second, like we always do every morning, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education and career. One of the easiest ones is right there on YouTube. You can check out the join button below the stream, which gets you access to the extended hours room, where we continue the morning room with a little bit less delay to the end of the session. YouTube members also have access to the community area on YouTube, where I post all kinds of different chart setups, stock charts, analytics, and more. Of course, every member gains access to the Discord chat server, and you also get that awesome badge next to your name, which to show your support and all that cool stuff. Oh, sorry, gotcha. Yeah, I had a little note in the background there. Anyway, if you want to take a massive step further forward in understanding our trading approach and what it is that we are doing here every day, look no further than the Day Trading Academy. It's where you can find out how we do everything. But listen, this isn't a small little PDF guide. You can finish that you're going to finish in an afternoon. This is, more looking like 19 plus hours of video course material. Along with the course, there's homework and study guides along the way to really make sure that you're understanding what's going on while you're navigating the course, which I review personally. And then, of course, you also get the DTA upgrade discount, which is awesome when you're ready to go up to the executive suite, the top floor. That's where you're going to find all the VIPs. And that is that's the top shelf, if you will. Now, the cool thing with VIPs, they have permanent access to everything that is SSFTG. Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, and everything else. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream for the entire session as well, meaning that they are on the fastest connection you can get without any delays from start to finish. So whether you're here for the very first time or you are one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today to end off this week, and fingers crossed we can get some interesting setups and things going on for today to give us a little bit of an idea of what's going on. Of course, don't forget to grab your morning DP levels. Those are posted for you this morning on the Major 7. It's going to be NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. Those are all there for you, ready to rock and roll. As far as the news is concerned, we really don't have anything. The news calendar is really light, really calm, really quiet. All things considered, really, I mean, well, we don't have anything to worry about. Nothing to really worry about there. So, because we can just close it down from that. Looking at the S&P and working our way forward, we did have a very nice correction dip back to the downside. And with that corrective dip back to the downside, we've got this cycle from the top all the way down to the bottom, which is pulled back about 2.88%. As we look back historically, that is roughly in line with where all of the other pullbacks have happened. And it did end up bouncing there. I was looking for it to go a little bit further, if I'm totally honest. Oh well, it did bounce all the way back up and close near the middle point here at around 44.03. We're slightly under that after a dive in the overnight. But this is starting to kind of look like a little bit of a wonky left shoulder, but a head and shoulders, potentially for a reversal back up. I really do not like head and shoulders with tilted shoulders against them like that. I like them to be for them. What I mean by that, just to make it a little bit more visually obvious, when I'm going for a head and shoulders, I really want those necklines to be sloped against the direction that I'm looking to break out in. So if I'm looking to break out long, I want the slope to be down. When they're inverse of that, where you have a situation like we have here, where you've got this move down, left shoulder, head, right shoulder's way up there, it creates this wonky neckline. I don't like those. Those typically don't work very well. And if they do end up going, it usually only goes about half the distance, maybe even a quarter. It just kind of flops on itself. So as far as the S&P is concerned, it's fairly obvious that the bulls bought the low. That's pretty straightforward. If we go from the top all the way to the bottom first, and just to double check what the impulse is, working our way from top down. Fantastic. I love it when my data is bugged so I can't actually see what's going on. Perfect. Let me just go include the rest of the next day, I guess. That sucks. All right. Well, it didn't change it. That's good. The POC is still up at 44.39. So, I mean, they're trying to create a POC here, but realistically, this looks to me like a lot of bulls. Let me use a different color here. A lot of bulls came in on a two-legged pullback. They're trying to rotate back to the upside. And you can see the POC that they left behind. It would have looked beautiful at the time, but then it rotated underneath. And you can see when they hit the escape hatches right there. That's where everybody jumped ship. And, well, you can see what happened afterward. Now, with this move to the downside, we've got a relatively... I mean, this is a fairly obvious two-legged move to the downside, but it went a little bit of extra distance, right? That little 1.5. And usually when I'm looking at that, that starts making me think, like, wait a minute, this may be an impulse wave to the downside looking for a 5-wave structure. But we've already come back and retested the inside of wave 1, so, I mean, it could be 5 waves, but it doesn't have to be. You know, it invalidated the whole impulse side. As long as we are still creating, and if we move this forward, a POC that is above the market, then realistically we have an upside objective, which is at right now around 44.39. These could be bulls from, you know, bulls who are trying to buy from earlier. They got stuck. They didn't hit the escapes, whatever. Regardless, that's kind of the situation that we're in. They haven't shifted the POC down, so I have to assume that these are potentially longs that are stuck or shorts that have already had a very nice drive down to their targets. Over on gold, we are not doing much of anything. I mean, it kind of looks like a little bit of a flag, I guess, all things considered. It's so narrow, it won't even let me draw it on the bottom. There we go. I gotta widen it out a little bit just so it fits. But this is kind of the overall movement that we've got going on. So maybe we're trying to transition back to the upside, and this new high, higher low is a great start, but they've got to break a new top into the 1800s to prove it. At the moment, if we're looking at this from a cycle at the lows all the way across the top, pretty obviously we're going to have a POC at the highs. That would be the assumption. And that's where what we were talking about yesterday, how the bulls were trying to break above it and they failed underneath. If those longs were long, that was their chance to get out of break even, or for shorts to take a short opportunity in the overnight, which worked out fantastic, back down to settlement. Now, this is still holding underneath that area. Now we've got another lower high kind of in the sequence here. So all things considered, in the nearer term, at least, it may make more sense that the bears try to get a break down that ends up, you know, we'll have to wait and see. All the bulls are going to be hanging out down here. These are the value bulls. They don't want to buy way up here. So we're not really going to see a whole lot of interest until at least down in the 70s. And, you know, even then, we'll have to wait and see. The last volume cluster wasn't really anywhere near that. It's 52 maybe? Yikes. Basically, it just looks like the sellers have a really good shot at trying to get something going, but if they fail, that would be a nice reason for the bulls to hit the gas pedal. Hey, Steven. Yeah, that's, I wanted to make sure to get it on the calendar with the, what's it called, the premiere or whatever, so people knew when it was coming. Super exciting. All right. Over on crude. I mean, still going down. You know, I mean, it's going along with what we would expect it to be doing, but here's the thing. This is starting to separate away in what we were talking about yesterday for that two-legged move down, where you've got the A to B, C to D kind of thing. Now, the one-to-one move is a little bit further down here. That is at almost 60 bucks. Right now, it's at about $60.30. That's a really nice zone for bulls to want to try to find an area of interest. But, you know, we've got to kind of ask ourselves here, does it make sense for for that to sort of take place, you know? So we've got to look back and see, why did it fall off of the 74s? I don't care about the fundamental reason. I want to see who lost the battle. I think it's fairly obvious that the bulls who were buying in the 72s, 73s were the ones that sparked the fire. And if we go back, oh yeah, that's right. That POC was right smack at the top, wasn't it? They had that big POC up at the highs, which rotated a little bit further down. As the market continues lower, we can see some possible dip buyers, maybe sellers taking profit. And from a bull's perspective, they had a good shot. But when it rolled underneath, notice what it never came back to. Okay, now we're starting to build a little bit of a picture, right? Oh, wait a minute. These bulls, they got stuck, but did they get a break even? Tough to say. Technically speaking, they didn't. If we go a little bit further forward and include the next day down to the next drive lower, they have another low there. Let's go down to there. That POC still up there at 70.89, so the longs are still stuck. Now, as we continue further forward, notice the volume that's beginning to build in these 68s, right? So we're trying to track, are the bulls trying to get an exit? And all of a sudden, the POC shifts down. We have a rally back up. Now, keep in mind, the POC was here, and then the POC shifted here. If they are looking for a break even, where would that be? Well, 1 plus 1 divided by 2 equals here. So if you want to know why there was so much resistance here, a lot of traders tried looking for the breakout move, and when that failed, everybody gave up. That was the spot right there. That's the break even. And when the market came back, when they realized, crap, I should have got out at break even, what did it do? They got out at break even. They didn't miss it the second time around. So noting that the bulls are really hitting the escape hatches and they're being given second chances, usually after that second chance, they're typically not given any more opportunities here. Let's see what the bigger volume looks like. All right, so as far as the volume is concerned from here, it's still up at those 68.84s, which kind of makes sense because that's where they all exited a break even. So seeing that jump back to the upside, we knew if they missed it the first time, they weren't going to miss it a second time, and they didn't. Rotated back down, new lows. I mean, realistically, until something changes, we have to assume that the bulls are on the back foot, probably have gotten a break even, but there are some stuck bulls still from the 71s. Maybe even a little bit further up, but the big POC was up in almost 71. So we'll have to wait and see what they want to do here, but right now shorts have every reason to keep going down, and that downside objective being right at around $60 makes pretty good sense. Over on the euro, just kind of chopping around, starting to look very wedge-esque, which is, I think, probably one of the most obvious wedges we've seen in a while. But it could be on a few different multifaceted forms, if you will. We've got the wider move going down here, or the shorter term one rather, right here. And then if we go a little bit wider, we've got the next one, which is a bit further up, equal bottom. It's the same thing. If we go a little bit further out, then the wedge is like way up at the top. That doesn't help us a whole lot. So these are kind of the two zones of resistance building a bit of a pocket in here that's getting smaller and smaller. And the smaller that pocket is, the easier it is for the bulls to get out of that. And you can kind of think of it like one of those avalanche wedges where the market just pile drives in one direction. And then out of nowhere, it's like, what the heck just happened? It has this really aggressive move and then whoop, all the way back up. That's the same concept. It pinched so aggressively that they ran out of steam. It dropped too fast, whatever way you want to look at it. But if we start cracking through that, that's going to be the potential reversal point for bulls. They may already be trying to form it, but they're still making new lows. So we'll have to see. Over on Bitcoin, we have another continuation to the upside after the higher low. Now, from the micro phase, we can pretty plainly see here, we've got wave 1, wave 2, really strong wave 3. Wave 2 was nice and clean, meaning wave 4 is probably going to be a freaking train wreck, which is what we're getting. Sideways consolidation, we're probably still in wave 4, which means that buying the dip makes a lot of sense for the upside objective, back up towards the highs, back up towards settlement, that area. Again, I still don't really have a reason to believe that Bitcoin has any enough power to go to all-time highs, but that said, it does still have a lot of juice in the tank to potentially reach up into the mid-50s. So, plenty of space. And the bulls are starting off on the right foot, higher lows the whole way across. Even over here where I wanted to see that trap, Ethereum got the trap, Bitcoin didn't. That tells you something. The last time we saw that, the shoe was on the other foot. Ethereum was the one that was not getting the traps, and Bitcoin was. And Ethereum had a massive rally. That was back when it was at $700, and now look at me now, Mom, $3,200. So, I mean, this is a sign of pretty good strength. They've got a reason. That gold POC is just nasty. All right. Let's see here. Transitioning over to the NASDAQ and looking at the daily, we do have the daily pullback at 3.04%. What a shock, an average 3% pullback. Honestly, I was kind of surprised, to be totally fair. I really wanted to see this go a bit further. I wanted to see it trap the larger low, not this little intermediary low. It's a good example of a trap. It's a fantastic example of a trap. I wanted to see it dig this one. So I got a little greedy, you know, it didn't make it down there, whatever. It is what it is. The important thing here is that the market is now closed 3 successive times underneath the POC at 14,984 quarter. 1, 2, 3 after a very strong bullish attempt that did not trigger. Important to note that did not trigger. Because realistically then, no bulls got stuck, meaning that it doesn't have to bounce right now. It looks like a great launching point. I mean, it really does. You've got first leg down, second leg down. But to me, this makes more sense for a higher low. Every time I've wanted to buy the dip, I've wanted to buy it a little bit lower and usually around the 3%. So this time around, it just didn't look that appealing. And honestly, I still don't see it. The POC's top weighted. We need more proof. Now with 3 days closing underneath it especially, that's going to leave me on my guard a little bit. Yesterday's high of day is going to be a concern. That will be a trigger point for longs on a swing, but at the same time, you know, I'm not feeling the warm fuzzies here, that's for sure. Either way, it's hard to not at least feel a little bit bullish when you're looking at this morning's movement so far. If we look at the overall driving momentum that we've got going on from the bottom all the way up, this amount of momentum that they're displaying is, I mean, very large, but realistically, it's that of a reversal. This is a very obvious reversal point. And what happened? What sparked this? Right, well, wait a minute. If we go back over here, what sparked it? It looks like they got all the stops, probably. All those longs trying to buy the dip, like, yes, I got it. This is the one, right? I got the higher low. I'm set, ma. I'm good. I don't have to worry about it. We're going all the way to the highs. I'm going to go to bed. I'm going to come back tomorrow with all of the money in my account, right? Nope. The market came back in the overnight, tagged all of the stops. That's where all of the industry money was waiting, and they were happy to gobble those stops up. And now that would make sense why we're seeing the rally. This is a FOMO squeeze. We have all of the traders who were trying to hold long in the overnight. They were trying to get the reversal back to the upside just to get taken out basically to the tick. Now to see it reversing back to the upside again, they're chasing hard right now. And when we have this kind of momentum to the upside, there is only one objective, that is a new high. And right now a new high is back to 15,000. It makes a lot of sense. So we've got a heck of a lot of momentum going on here, and the bulls are going to be looking to keep that going. At least for the time being. From the cycles off the low, we have an L4, which broke to a new high, but it had that really funky higher close transition. Oh, either way, when they broke above the highs, usually you're expecting an L1, but they rotated down to an L3. Kind of makes sense, given that move. But after the L3, they did hold the L1, so back to normality. And now we're looking for another L1 back within that trend. It's only the second one, but it does make sense. How's it going, Seven? Welcome, welcome. See if we can get a little dippity doodah going on in here, so we can have something to sink our teeth in. Right now, the market's just going crazy to the upside. We've got the open hitting, a little more continuation to the upside. Kind of pulling back, kind of pausing, kind of halting around a little bit, not really doing a whole lot of anything. After that big rally to the upside, I think bulls are just waiting to see, like, where do we buy? How's it going, Ace? Welcome, welcome. But with all this bullishness before the markets start, will the open give people FOMO? Oh, 100%. Yeah, that's why I'm calling this a FOMO rally. Because it took out all of the shorts on the lows, and it did it in the overnight when people were sleeping. Right? I mean, we're talking U.S. session traders who were buying at the end of the day yesterday, trying to buy the dip, or even earlier at around, 2:30, trying to buy that dip and hold for the overnight, so they put their stops under where? Well, this is why we always talk about why you use confirmed stops and not non-confirmed stops. This is the exact reason as to why, because they end up being traps. And that trap, unfortunately for me, happened at like 3 in the morning, but that's the spark that lit the match. I mean, this thing's just hauling now. So all of those shorts or longs that got taken out, they're trying to jump back in before they miss the boat all the way up to their targets that they were trying to hold on to from yesterday. It's very vindictive. S&P is currently opening with a very small gap to the upside. Looking in the pre-market, though, that isn't to say that it hasn't had a real nice rally off the base. If it gets too close to the open, it's going to be a bit of a challenge. Right now, we still have 8 minutes, Well, 7.5. There's still a little bit of time left. Market's just hanging out. if the train makes a pit stop, yeah, exactly. I know, I'm right there with you, PD. Seriously, these 3 or 4 in the morning moves are ridiculous. I mean, we've sort of been joking about having to trade the European session, but it's kind of not a joke either. Not when they have all the fun. All right, NASDAQ. Starting to dip down into this area. The zone is in the 60s. Lower 60s, sorry. Let me clarify. Like 61, 62. Yeah, exactly. Just let us know. I mean, but for real, I know it's not at all a joke. It's crazy how repetitive it is. I mean, both up and down. It usually depends on the preceding trend, but it's crazy. When the markets are this aggressively up, I suppose they'll use any advantage they can get their hands on. Why not, If it means waking up at 3 in the morning to throw a couple trades on, hey, whatever. $9.25 getting a little bit of jumpiness. Interesting timing. $9.28 right around the corner. Now this is looking a little bit more like an ABCD corrective phase back into an L1. Could it be due to summertime markets? No, I don't think that's the case. Not anymore. And the only reason I say that is because after COVID times, basically everybody has an account now, right? Whether or not they still have money after COVID in their accounts, that may be a different story. But a lot of people have access to accounts, and they're really pretty easily funded, you know? So as far as doing it in the middle of the night or at 3 in the morning, from a logistics standpoint, I think it makes a lot of sense because that's going to be where you can manipulate it enough to get away with those types of traps. Remember, you don't have to be selling the whole way down to Sparky. You just have to make it look scary enough to get other people to sell too. You start the domino effect down into where you're looking to buy it back up again. It's like a game of ping pong with yourself. But in a legal way, you know. Well. 9:28 around the corner here. Got about a minute and a half, 2 minutes and a half. I don't know, whatever. What day is it? What time is it? Come on, NASDAQ. A little flippity dip. We do have the settlement price just underneath that. Not too far away, really. Where'd the S&P go? There it is. Well, she's climbing. I mean, what? Oh, there we go. Problem is, we're going to be running into some resistance up here in the 13s. That's going to be a super awkward spot to open up in. Not a whole lot of room for the bulls. Market looking like the bulls are failing on this higher low so far with all the wicks up. That can change in an instant, especially with 9:28 around the corner. Nice bullishness back to the upside. Interestingly, though, there's 300 ticks left on this candle yet. Not really dumping a whole lot of orders into it. Here comes 9:28. All right. Another continuation back to the upside. Barely. Just sitting and hovering, sitting and hovering. Going into the open here, got about a minute left. So far, I mean, the NASDAQ barely made a new high. That's not really much to write home about. Looking across the board, the Euro's catching a nice lift to the upside. 1 minute to go until the open. Mm, 3 to 1 isn't going to fit. 2 to 1 does. Here we go. Man, this is going to be an interesting open. Couple second dip right before, right into the L1. Nice dip down into that zone. Take it at a 3-to-1 actual risk. We're at the open. I'm not going to play around with it for too long. Nice pop to the upside. Market's just hovering around. Still playing off of the L1. That's a heck of a bear bar to start the day off, S&P. Jeez. All right. Well, we didn't open up in the 13s. Man, it looked like they were going to get close, but opened up in the 6 halves. We're still kind of inside the wedge that they ended the day off with. There's not really much of a change. Nice pop to the upside for the L1 continuation. Couldn't get a break above the highs, but a 3-to-1 actual risk. I'm okay with that. Seems like everybody else is okay with that too. Jeez, that dove hard. See if they can finish the job though. New low, maybe the kind of finalization of the wedge base. This could be the breakout point that bulls are looking for to finish the job. There they go. Now they can get it going. We have, remember, cycled off of a -1. So the fact that we've gone all the way down to a -1 DP already and we're rolling back up to a +1/2, this is not just a +1/2 anymore. This is a +1.5. It has a very good probability that we close underneath 15,000 today, which is roughly where this is. Either way, as far as the continuation standpoint goes, we've got an L3, which broke into a new high. That was an L1, which followed through. Perfect. A little more continuation further up. We've got another L1, another continuation back up. Buyers are going to be looking for this sequence to keep going. Now, what could the market be reaching out for? We're back above these previous swings. Remember the previous high of day. This is going to be a really nasty spot up here. From the overall volume all the way across, where's that? That's still at 965. That adds a lot more light if you had multiple contracts on that to try to hold on for more. I only had the one. Wow. Wow, wow, wee, wow. What a move. POC's right in the hot seat. I like it. Now, from the rotation off of the lows with this giant rip to the upside, we've got L3, which is right there. That's not the one I want. Into an L1. I forgot why. It always works otherwise. Not this time, huh? All right. And then finally, the present one that is currently looking for a continuation to the upside. Look at that bottom weighted POC on the S&P's first 5. Wow. Holy crap. Ooh, man, buyers BTFD and the crap out of the S&P. Jeez. As far as the first 5 minute on the NASDAQ is concerned, let's try that again. 970. which, I mean, man, that lines up real nice. Can I make this so I can, like, see it, though? That'd be nice. There we go. There's 3 things just resting on the L1 right now. You've got the POC, you've got the 5-minute POC, and you've got the L1 continuation for the 3rd time to the upside. Sheesh. My only concern would be a very obvious wave 1, wave 2, wave 3, wave 4, wave 5 completion. More likely to go a bit more sideways, but the amount of support down here is just frickin' bonkers. So initial continuation up for scalpers, made that one fairly straightforward. Secondary objective is going to be looking for further momentum to the upside. Churning down, just chopping around this area. 3-to-1 actual is no longer inside the high, so we've got to modify down to a 2-to-1 now. All right, well, I didn't even have a chance to buy the secondary zone. So my goal on this, so we're all on the same page, is to buy, and then when it dips down to the next zone, because my anticipation is that the L1 continues to hold, is to buy the secondary zone. That thing dipped down there so fast that I didn't have a chance to, but the objective then, when it gets back up to around a little bit above the break-even point, is to exit the first position with a small gain, basically to cover commissions, and that drives your average way down here. So you have an incredible area to put your stops and kind of modify along with the trade. But it had popped up so quickly, I didn't have a chance to really do anything else. So I still have to follow my trade plan, but kind of frustrating how it happened. Now, if we could get a dip back down into the earlier one at around the 65s as extra context, it wouldn't hurt my feelings. Or maybe gain a little bit of volume proof, or actually that volume proof was right there. They just popped back above it. They might not pull back either. Nice little bear bar there. In context, so it looks more likely to be a trap. Nice little dip back down into these 75s. This is the chance for the bulls to re-up on lower risk. Nice pop for the first scalper's objective back up. See if they can finalize this move back higher. Keep on going, keep on going. This is the break point. Let's go. Come on. We got that 1.5. That's ahead of the 2-to-1 objective right now. Testing it. Too much resistance. I'm going to take it off there. Give me 1 second. My son needs help. All right. More continuation back to the upside. following through. Although, again, the reason why I'm not necessarily holding on for the full objectives, we're running into a positive 1.5. And remember, this isn't just a positive half. We came off of a -1. So it's a 1.5 DP move all the way to the upside. I have to stay cognizant of where the probabilities are, and the probabilities do not favor me being long into that. So it's not worth it. If it's not going to break through, which I tried waiting for, if it's not going to break through, I don't want it. No thanks. Now, another reason is because we've already had a 5-wave cycle to the upside. I'm looking at this more likely to go sideways, and we're building a top-weighted POC. It's more likely that we see sellers try to make a valid attempt, probably down to settlement, and then rotate back up. Yeah, exactly. For the same reason why I'm not interested in holding along through that area if it's not breaking through, is the exact same reason why buyers are buying down here when it's not breaking through, right? I mean, these areas are respected to an incredible degree at times, and you do not want to mess with them, especially when you're way out at like a 1.5 or a 1. Ugh, that's just really nasty probabilities to be fighting. Especially on a Friday. Yikes. What would be very interesting. Little trap. Right underneath these lows. That's where all the stops are. They're testing the POC again. Still bouncing off of it a little bit as well. The L1 buyers haven't been satisfied in the sense of having a new high. I mean, obviously the L1 worked out perfectly, but in terms of the continuation to the upside, they never got it. Maybe this is just another shot to re-up. If it is, they got to bounce now. Because if they start sliding here, that's going to be L1 longs who are stuck. And L1 longs who are stuck respond very quickly. And they usually don't hang out too much. Especially now with a top-weighted POC. All right, more L1 buyers showing up to the party. As far as the S&P is concerned, I mean, realistically, this last rally to the upside, normally I would be very interested in buying the pullback, right? I mean, we've been talking about that all morning, like buying the dip, buying under, but we've got some problems now. They've already kind of finished the job. The objective to the upside that they were gunning for is sort of over. I don't have anything to buy for anymore, you know, like that was the objective to the upside, and now that's gone. I've got to wait for more proof. It is likely that we do find some scalpers buying at the lows of that previous bull bar, but I don't know, it's just not enough for me right now. L1s continue to hold above the POC now at 75. These 75s, man, these levels are haunting. Always a 75 or a 50. Not so much the quarters, though. You notice that? Not so much the 25s. 50s and 75, though. Oh, man. 44.11 POC shifting to the upside now, suggesting that the longs who were buying the dip at the open have now exited at least a portion of their position. Longs aren't necessarily as long as they were before, but remember, the market is still closing above those POCs. Bulls still climbing. They close that S&P bar at the top. That's bananas. More continuation to the upside, more bullishness. We do finally have a completion of the third L1 in the sequence. Significantly more likely now that we see a deeper corrective phase, but it doesn't have to. We've seen these L1 trends go on 6, 7, 8 times in a row. Very nice continuation back to the upside. And again, in hindsight, you can see why I don't mess with these areas. Like if you had more contracts and you were able to, you know, kind of play off of that area, or if you were more aggressive, it's Friday. Typically, you don't have the gas pedal down too hard on Fridays, but you can easily see what they were trying to do inside of there. But I do not mess with these levels. No thanks. Now that they're above it, maybe we've got a zone of support. But just remember, we've moved to positive 1.5 now. Going on a positive 2 if we get up in the 15,030s. Incredibly low probability that it closes up there. Doesn't mean it won't. But right now on the 15-minute chart, although it's super, super tiny, got a little bitty 5 wave. Which is also completing. The 6-1 is where we are right now in the 15,012s. If they are going to continue a little bit further up, the next objective would be a 1-to-1 move, which lines up, I mean, literally perfectly with the previous POC that they left behind at 108. Can't make this stuff up. Look at also the previous wedge or channel lows, depending on how you were drawing it up. Tried breaking underneath it. The sellers tried. They failed, rotating back up. It's all happening. Volume in the middle at 975 potentially also suggests for longer-term objectives, really longer-term objectives, well, maybe. It is the NASDAQ after all, but upside objectives towards 15,100 if it wants to break away. Incredible rally to the upside. Remember where we are in the cycle. We have a very obvious L1, well, actually L3 into an L1, 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 all the way back up. The bulls are still likely going to keep trying to holding the L1s, but it does make a lot more sense to expect a deeper pullback, a corrective phase. Maybe this was the corrective phase and it was just rolling. That could have been the cycle then, like something like this: wave 1, wave 2, wave 3, wave 4, and then this jumbotron wave 5. Corrective megaphone into a rolling completion, into a wedge breakout, complex corrective phase, and now starting off new one. So, I mean, it does make sense that maybe they are trying to get a new impulse wave to the upside. They did it in a really nasty location, but we've got wave 3 in the really short term. The S&P, with this rally to the upside, is both impressive and concerning. I mean, we're kind of breaking above this range, and we're doing it in a really powerful way, right? When you break above a zone and the breakout point is a middle of a big old bull bar, then, I mean, realistically, that's a good shot for the bulls to try to get things going. And we don't really have anything until, what, like the last transitional phase was right inside here. So there's really nothing until like 27s, 28s. Still have a bit more room to the upside. Just be careful. Massively overextended. Looking at the POC on the NASDAQ, it has not changed like we saw in the S&P. It's still down at 975. Longs are still long. I mean, you can see the volume there, but... I am looking for a deeper corrective phase to set in this time around. So, although an L1 may possibly hold, I am not so interested in the L1. I am more interested in a deeper pullback to an L2. Notice as well the L2 lines up not only with a pattern straight out of the Academy, but we've got the POC at 975. We've got an L2, which is hovering right there. We've got the 5-minute POC, which is at 970. It's also a retest of a previous congestion zone that we've just broken out of. If that was a corrective phase, that's the perfect spot for the market to pull back to. It lines up with everything for a deeper correction. And if it goes higher, it makes that deeper correction even easier, because then it puts the L2 above the POC. Got about 10 minutes until we transition over into 10 o'clock. So with that in mind, let's do a checkup and see where we're at. Again, I don't care about the dollars and cents, but I do want to see what the trader's math is for the week, even though it wasn't really that active of a week. It was still a very good week. So before we leave, we've got 27 trades, 96.3. Yeah, I mean the average loser's 3. There's basically no math to be done. So, I mean, as far as the math this week goes, pretty spot on. I don't think we could have done it any better. Well, apparently we could have by about 3 ticks. Crap. I guess there's no trader's math to be done, because it's not. That's going to be such a crazy number that it doesn't even make any sense. Yeah, really good week. As far as just kind of sticking to the rules, taking it a little bit slower. I know that I'm going to have I was going to have a really crazy messed up week. So I definitely took it a lot slower over here, and you can see just picking the best setups that line up with your valid 3 rules. Right? As long as you have 3 things telling you that there's a valid trade, you got 3% extra in your favor telling you should take the trade. That puts your trader's math in the right place. We just wait for those. Which is basically all this week was. I like it. I'm okay with weeks like this too. Where the math doesn't even make sense to add up. I like that. I'm totally for that. Give me 1 second, guys. I'll be right back. All right, I'm back. Sorry about that. My son just went through and cleaned his entire room. Okay. I feel like I should go get a lotto ticket. 2 secs. I'm gonna run to the gas station fast. Anyway, how many points? 7. What was the? How many points do you take on average every day, if you don't mind sharing? I don't base it on points. I base it on risk reward. Every trade that I take, it depends on the week, really. This week was, I don't think I took many scalps. Even these were 3-to-1 actual risk. The majority of the trades are 2-to-1, 3-to-1, etc. So as far as like the average points, it's really dependent on the current situation and the volatility. I mean, it's going to vary depending on what's going on. As an example, like this one here was, I don't even know how many ticks that was, 42 ticks. So that's 10 points, right? 10 points, 10 and a half points. So, I mean, but that's for this instance here in this market context, you know what I mean? So it just kind of depends on what's going on. I'm usually targeting, if I'm swing trading or trying to get into a bigger move, I'm going for 2-to-1s, 3-to-1s at all times. And if I am in scalp mode, I'm going for a minimum of 1/2-to-1 and no less. If I can at least get a 1/2-to-1, it's not worth my time. And those 1/2-to-1s, as an example, those are usually the ones that I throw on in the overnight. Like this one was a 1/2-to-1 short to the downside. I really liked the potential, but I don't know where the market's going to start reversing from. I know that this was a major zone of resistance at the time, going into the into the afternoon session. So when it starts rotating down and I've got proof, awesome. But I don't know that this is going to be the dead spot that it's going to turn around. I might want to trap up here. So realistically, I have to initialize my stop up here. And if I'm going to be risking that much, I cannot accept any less than half of what I'm willing to make on the trade. So if you measure this up and you look at the 1/2-to-1, you'll notice why the target was there. It's my 1/2-to-1. That's the scalper's target. I can't accept less than that. And you'll notice that scalper's target is above the lows. It fits. I tried holding through the lows. You'll notice I took it a little later. but you know, c'est la vie. You can't get them all. And of course, when I exit the next time around, the stupid thing does end up going through, whatever. I mean, it's all about context and understanding where you're at in any given scenario. If I need a high probability, then I have to pay something for that high probability. And that payment for the probability is risk. That's how the markets work. Now, on the other side of things, if I'm going for a 3-to-1 or a 2-to-1, then my probability can't be good. That's just, it'd be like an apple falling up. It doesn't happen, right? So if I'm going for a 2-to-1, at best, I could never be more than 50% accurate, ever. That would be an impossibility. And if I were going for a 3-to-1, I could never be more than 33.33% accurate. That would be an impossibility, based on probabilities and how math works, you know? So, I mean, with that in mind, when I'm trying to find an edge and when I'm building into these zones, my goal is just to get like an extra, 3 reasons at minimum. But if I can get 3 to 5 reasons to get into a trade, then I've got 3 to 5 extra percent in my favor. And that's all the difference in the long run. You may still only be 40% accurate, but 40% of the time you're making 2 to 3 times as much. It's okay. That's trader's math. There's videos, several on that. So, and that's why when I go over the numbers at the end of the week, I don't look at the dollars and cents, because it's totally irrelevant. Dollars and cents on one account could be pennies on another account, could be thousands on another account. It's totally irrelevant. I like looking at it in more of a, how's my trader's math this week? Am I trading correctly? Do I need to make adjustments? That's why I look at it that way. I don't really care about the was it a green week or a red week, because if you're following your plan, that isn't going to matter anyway. It should, in the long run, end up being green regardless, as long as you're following your plan. My job is just to make sure that I show up to the party. And sometimes the friggin' NASDAQ leaves me behind. It is hard. It's very hard to ignore your P&L. You'll notice my P&L isn't displayed in dollars and cents. It's displayed in ticks. When I'm measuring things, it's displayed in percentages. It's just sort of a psychological hack, if you will, to kind of get the dollars and cents out of my head. I also look at everything in life as ticks. Like, you know, if I've got to go fill the tank or something, it's not, oh, I need $30. It's, you know, oh, I need like 30 ticks, 40 ticks to fill this stupid thing. You start kind of diverging away from the dollars and cents pretty quickly, and you start looking at it more like a commodity, which is exactly what it is to us, at least. So we are at 10 o'clock. So let's transition over into the extended session. I don't think I have any other questions coming in, and there's still some definitive upward movement going on here. Golly. So as far as the week goes, that is going to do it for the week. We'll be back on Monday. For those of you who are ducking out, enjoy the weekend. Make sure to get away, rest up, and we'll see you all back on Monday. For those of you that are hanging out in the extended session or the VIP side of things, then we'll see you in, well, just a couple seconds. So, all right, stay tuned. Otherwise, we will see you all next week. All right, have a good one. Thanks for tuning in, and we will see you all then. Thanks.